Hi there, this is Sandra with the Mortgage Center. I love sharing information with you, and I love sharing information, especially about mortgages and interest rates. And today's message focuses around a curious conversation I've had with a few clients in the last week. And there must be something online that is promoting these conversations. And one of the things that I've been hearing from some of our clients is maybe looking when their mortgage is coming up for renewal or they're refinancing or doing something with their mortgage, whether or not they should take a shorter term. So instead of doing like a 5-year fixed rate mortgage, maybe doing a 1 or 2 or 3 year fixed rate term. Now, when we do alternative financing, we always recommend shorter terms because the reason why we're doing alternative financing for the client is because their taxable income is low because they're self-employed, or maybe they've had credit issues and we have to do alternative financing. But if you're a prime borrower, and I'd say probably 60% of our clients are prime borrowers. A 5-year fixed rate mortgage right now is excellent. And remember, in Canada, fixed rate mortgages are based off of the bond market, and the bond market is a leading economic indicator and it predicts future inflation, kind of in a roundabout way. Anyway, so right now, shorter terms are actually at higher interest rates than longer term. So, when I'm talking to a client, they're saying, well, why don't I do like a 1 or 2 year fixed rate mortgage with the idea that rates are going to be lower in a couple of years and then I'll have the opportunity to maybe get a better rate. But again, 5-year fixed rate mortgages right now are at a great rate, and a 1 or 2 year term or even a 3-year term is often higher than a 5-year fixed rate term. So what the borrower I think is telling me is like, it's okay if I'm paying a higher rate for a couple of years if I know I'm going to get a low rate for the remainder 2 or 3 years. Now, it's an interesting idea, but I have a couple of points for you to consider on this. Okay. Um, I look at interest rates on a daily basis, and I really focus on this to help our clients with this kind of decision making. And most people I find the mortgage is the last thing they're thinking about. They just are looking at regular, steady monthly payments or biweekly payments or weekly payments. So if you're not tracking this on a regular basis, you may miss the opportunity. And the Bank of Canada is saying that, okay, we might have interest rates correct in the next 12 to 18 months. But what happens if that doesn't happen? And we know what the last 2 years have been like with all the uncertainty. So that's just something to consider. And I feel like it's a bit of speculation on that. So what happens if you choose a 2 or 3 year fixed rate mortgage and we're still seeing high interest rates? And keep in mind that the last 2 years have been historically low. We will probably not see those low interest rates for another generation. Okay. And I think a generation is 10 or 15 years. So if a 2 or 3 year fixed rate mortgage isn't going to correct things. But if you're sort of really following this philosophy or this idea, one of the things you could do is take a variable rate mortgage. Now, most variable rate mortgages right now are at prime minus a half. We do have some mortgages that are prime minus one, but the majority are prime minus a half currently. That's the pricing. Today's prime rate is at 6.7. So I mean, you can do the math, and we'll probably have a few more rate increases before the end of the year. So, is the prime rate going to be as low as it was in the last couple of years? Not likely. But if you're really kind of following that philosophy of, well, like rates are high now, whereas you can get a 5-year fixed rate under 5% right now. So, something I wanted to share with you, just a quirky thing that we're seeing in our office. And I think it's because people are reading headlines in financial information and may not be thinking about, you got to see the, forget what the saying is. My father always had this saying, you have to see the forest beyond the trees. And anyway, food for thought. We love sharing information with you. If you are a first-time home buyer and or know somebody who's going to be buying a house in the next year or so, we are having a really great in-person first-time home buyers event later on in February, and we'd love to have you join us or register for the event. The link is included in this message below. Have a great day. Thanks again. Bye.